Yeah, hi friends. Uh, this is Anindya Banerjee from the currency desk. Since we last spoke, it's been almost a month, and there have been quite a ride in the dollar rupee. We have seen the Indian rupee depreciate from a level of 51.5 to almost 54. We were anticipating this. We were in the last video. We said that we expected the Indian rupee to depreciate further. We were targeting something like 52.5, 53, but the depreciation has been much more than that. Over the last 2-3 days, we have changed our stance in the market. But before we come to that, let me summarize some of the important events that happened over the last 1 month. We had the French and the Greek elections, and talking about the French elections, it was widely expected that the socialist candidate Francois Hollande is going to take the reins from the incumbent Sarkozy. Now that has actually played out. Now what it means for the politics in the Eurozone is that now there will be a much more emphasis on growth over austerity. All this while we have seen that the Eurozone has single-handedly pursued the German dream of disciplining austerity, cutting down on expenditure, and bringing the government under the strict budgetary rules known as the fiscal compact. But over the last 5-6 months, the economic growth has slowed quite significantly in the Eurozone. We have seen the economic numbers coming out of Italy, from Spain, and even from the core countries like Germany have shown the possibility that the Eurozone economy can contract quite significantly this year. The IMF estimates that the Eurozone economy could contract between 1 to 2%, but the downside risk could even be larger than that if countries like Germany also come under strain, because Germany exports close to 40 to 45% of its net exports flow to countries in the Eurozone. So Germany is also taking a collateral hit. Now after the election in France, now the focus is on to change the fiscal compact towards mix of policies which supports growth as well as austerity. Now it's going to be hard because balancing both austerity and growth is not an easy task, and secondly, we believe it can create a lot of political rift between Germany and other nations in the Eurozone. Now political instability is one factor which was missing from last year in the financial markets. We had the economic instability, we had the financial instability which the market had to grope with, so volatility was high. Now the new variable gets added into the equation, which is going to be political instability. We have to see how that factor plays out. But overall, our view is, at least for the Indian rupee, that we believe that 54 could be the bottom for the rupee, which might hold out for a month or so, and a range of 51.5 to 53.5 could play out in the dollar rupee. What could change? What are the factors which could actually affect negatively this view that Indian rupee could appreciate is if we have a significant flare up in the Eurozone political climate, if the rift between Germany and France, and also if there is a renewed concern that Greece, after a fractured political mandate, might look to exit from the Eurozone. If those are the risks which come to the fore, then yes, then we might have to abandon our bullish Indian rupee forecast and take a defensive stance. But till then, we believe Indian rupee can appreciate. Coming to the international currencies, we believe the euro dollar might be under pressure, but stay broadly within a range of 1.28 to 1.32. The reason being that a lot of the buying from the Swiss National Bank, which has pegged the Swiss franc to the euro at 1.2, is defining the trend in the euro dollar. So we don't believe that there's going to be a very fast depreciation in the euro, simply because SNB is buying the euro at lower levels. So it will be a very slow depreciation in the euro which is going to happen. GBP is expected to outperform the euro, so that is one area where one can keep an eye on. Apart from that, the GBP dollar is expected to also be a range between probably 1.59 to 1.62. And coming to dollar yen, we believe 79 is becoming a very strong support zone, and it might hold out for the time being. And so a 79 to 81 could be the range which could play out in the dollar yen, because below 79 the Bank of Japan becomes quite active. So that will ensure that floor holds. So that's it. Happy trading till we meet again. Thank you.